can grow your wealth without risking it in the stock market by opening a certificate of deposit and putting some money. Then you just need to leave it alone for the CD term and you'll earn a profit. Hi, this is Alex, and in this video I'm gonna show you 3 little benefits of having a savings account instead of a CD. There are some little known benefits of choosing a savings account over a CD. For example, you can withdraw your money at any time without being penalized, and you can often earn a higher interest rate. Now, if you opt for a CD with a longer term, you could snag an annual percentage yield that surpasses the best online savings account. However, CDs are not always the most ideal place for your money. If you're looking for a safe place to park your money, a savings account is probably a good option, even if it means you'll earn a little less in interest. A savings account is a type of deposit account, and it's probably the safest place to put your money. The interest rate on savings accounts is usually lower than the interest rates on other types of deposit accounts, but your money is still FDIC insured and it's easy to access if you need it. Let's jump straight into the perks of having it. Number 1, withdrawing your money without penalty. If you withdraw your money from a CD before the end of the term, you may forfeit some interest. CD terms can range from a few months to several years. The high API offered on these accounts is meant to encourage people to open one, especially those with long terms. There are no penalties for withdrawing money from savings accounts, making them a much better option for those who may need to access their cash for emergency or upcoming expenses. If you opt for an online savings account, you can often find APIs that are comparable to the best 5-year CDs. This doesn't mean the savings accounts are without any restrictions. Before the outbreak of the COVID-19 pandemic, a federal law known as Regulation D restricted the number of penalty-free withdrawals from savings accounts to 6 per month. However, the government suspended this rule in early 2020, and some banks still enforce some form of monthly withdrawal limit. If you find that you need to access your money more frequently than 6 times per month, a checking account may be a more suitable option for you. Number 2, API could increase over time. When you open a CD, you typically lock in a set API for the full term of the CD. This can be beneficial when interest rates are declining, as your API will not decrease. However, this may be seen as a disadvantage when interest rates are increasing, as is the case currently. As interest rates increase, the API on your savings account may also increase over time. However, with the CD, the interest rate is locked in for the term of the CD unless you choose to pay the penalty and withdraw your funds early. Withdrawing cash directly. CDs typically do not allow for direct withdrawal of funds via check or ATM card because it's generally not advised to withdraw money from a CD prior to the end of its term. However, this may not always be the case with savings accounts. There are several savings accounts options that offer ATM cards for those who want to withdraw cash without first transferring the funds to a checking account. However, savings accounts typically do not have as many options for withdrawing your money as checking accounts do. For those who want the high APIs of savings accounts and CDs with the greater access of checking accounts, a money market account might be a good option. These typically offer higher APIs and several ways to access your funds, but may have high opening deposit requirements. There is no clear answer as to whether a CD, savings accounts, or other account is a good fit for you. It depends really on how you plan to use the money in the account. It may be time to reassess your current bank account and see if it's still the best fit for you. There are many different types of bank accounts, so be sure to compare the options to see which one would better suit your needs. With that being said, thank you so much for watching, and I'll see you in the next one.